Hi, everyone. Welcome to APTA Live, Striving for Financial Wellness. My name is Casey. I'm the current Director of Communications for the APTA Student Engagement Group, and I'm your host for this evening. Tonight, we are joined by the founder of FitBucks, Joseph Reinke, and I will give our guest a chance to introduce himself and give a little bit of his background before we start talking about our topic this evening. And for everyone tuning in, if you'd like to introduce yourself in the comments and tell us what year you are, what school you're attending, that would be great. And if you'd like to spread the word about this event, tell people what you think, and continue the conversation, use the hashtag APTA Live. And lastly, if you don't follow us on social media, you can find us on Twitter and Instagram at APTA Students and on Facebook at APTA Student Members. So if you have any questions, feel free to drop them in the chat or in the comments, and we'll be sure to write them down and make sure we can try to answer them. All right, so I'll turn it over to our guests. So Joe, can you tell us a little bit about your background and what you currently do?
Yeah, absolutely. Thanks for having me. It's good to be here. My background, man, I've been in finance for a long time. Actually, growing up, my background was both in finance and sports. Those were like my two things. Started doing my first investments right around probably 12 years old. Went to school for investing, all that fun stuff. In my early 20s, once I realized I was going to be going pro in any type of sport, decided really to dive into money and business stuff just because it's like this is what I grew up in. It was easy to me. Ended up getting what basically it's called the CFA charter in finance. It's basically, I mean, people call it like a postdoctorate in investments. In the financial world, there's about 100,000 of us. I was doing wealth management stuff at that time, and then went into investment banking, valuation work, working with billion-dollar companies and all that type of stuff. Loved the job, but I also hated it because I wasn't helping anybody. It's like you're making all these companies that are already really wealthy make a lot more money. And I started thinking about my wealth management days because I had seen a bunch of really bad problems in the market and how the whole thing was set up, how there wasn't any technology there to fix those problems. And I started coming up with an idea of how to fix it. Long story short, once I developed the idea, I didn't do anything with it. I kind of just sat on it. And then one night, so my wife's a physical therapist, and she was in a fellowship program, and one of their directors was retiring, and we went, and it was my first time to really see like how PT is not just affect the people that you're working with hands on, but because you're making them more healthy, you're actually helping everybody else around them, their family and everything else. And I was like, well, I'm not a healthcare person. I'm not a tech guy. I'm not going to be like an Elon Musk where I'm developing a rocket to go to Mars, but I know money and I'm sitting on this technology that can help everybody. And that's the whole purpose is to reduce how much time you have to think about money. And so you could go spend that time doing something else that's more beneficial. And so then we launched the company. We launched it, I want to say, with the technology. We started doing some stuff in around 2017 with the technology. Have been helping PTs ever since. We help everybody now, but still primarily PTs. Helped about 11,000 PTs in that time span. Doing workshops at universities across the country, and going from there. So that's the quick background. Like I said, the key thing was that my wife was a PT, and again, seeing that night that they were honoring the person that was retiring, but then also a lot of her colleagues asking me for help with their student loans and stuff. It was like, hey, let's start that technology with student loans and start expanding it into other areas from there. And then, yeah, it just took off. So.
Awesome. Thank you. And we're so happy to have you here answering some questions. So let's jump right in.
Yeah.
So first question I have for you is, can you spend money on fun things while you're repaying your loans?
Absolutely not. No, I'm just playing. One of my things in the world of finance that I really don't like is when people are like, you got to do it this way and there's no other way. And it's like, no. And there's some famous people out there that are like, pay off debt. You should have no life. And like, to me, I'm like, screw that. Like, no, that doesn't make any sense. Right. And if you do that, fantastic. That's fine. No problems with that. But what I always tell people is the big deal is setting up a financial plan that puts you on pace to do X, Y, Z in a financial plan. So like if you're trying to pay off your debt in 8 years, that's fine. Like typically, like when somebody says, "Hey, I want to pay off my student loans," for example, really aggressively, we typically see 5 to 10 years. That's the typical time frame. Sometimes some people do it in like 2 or 3 years, like where they're eating like top ramen and stuff every night. You know, that's a little overkill, but they do it. But typically, it's like 5 to 10 years, and you don't have to kill yourself. And yeah, you can go out, you can spend money on fun things, and I'll talk about this a little bit more, as we go through. But we break down a financial plan in three basic segments. It's your day-to-day stuff every day with your income and your expenses. The second part is what happens over time, which is your investments and paying off debt. And then the third thing is risk management, like insurances, which protect your financial plan. And to me, it's like as long as you're doing that second one, you're investing and you're paying off debt, I go enjoy the rest of the money. Like if you're following that portion, go out and spend extra money on dinners and going out and vacations. Like that's fine as long as it's not hindering that other component. So yeah, absolutely have fun. Enjoy yourself. The other idea that we have some people do is, well, they'll set a short-term goal where it's like, hey, look, I'm going to have $2,000 paid off on my loans within the next 2 months. And then when they do, then they spend 2 months going after it. And then after they hit their goal, then they go out and basically celebrate and, have $100 dinner or whatever they're going to do and go drink or something. But so, yeah, you can have fun. It's just a matter of how you do it. And the only time you need to back up is like if you have a plan and you're not following it. And then it's like, okay, why am I not following it? Oh, I'm overspending. Like maybe I need to cut some stuff out. So yeah, that's one of the good ones. If you guys want, more information on that, over the next few months, we're gonna be rolling out more behavioral podcasts with some different ideas of saying, hey, like, how do I actually start developing behavior for this? Because you guys are PT, so you guys know this. So like most outcomes in healthcare are actually based on behavior, but that's like that across the board, like finance, whatever it is, eating, health, like whatever, it doesn't matter. And so, keep an eye out because we're going to be releasing some of those podcasts where it's like, hey, like here's some tips to actually start doing some things behavioral that you'll still have fun, but you'll start looking at things a little bit differently. So yeah, absolutely. To answer the question, yeah, you can have fun. So
Awesome. I think a good question to follow that up, because you said you were talking about the podcast, which I think is a great way to give tips for how to stay accountable. But other ways, how would you describe FitBucks in terms of other ways to help keep students accountable when it comes to paying off debt?
when it comes to paying off debt, so we have a premium membership. So after you graduate, you get to sign up to actually track your entire financial plan. So it's not just paying off student loans, it's everything. So it's like, should I be putting money in a Roth IRA, my 401k? Am I paying off car loans, saving for a house, whatever it is? Our new technology, we rolled it out about 5 months ago. It's like the entire financial plan. And so it holds you accountable on every single piece of that plan. So like your first goal might be saving for a down payment for a house. We're going to hold you accountable for that. And if you don't, you get emails, nasty emails from us saying, hey, what the hell are you doing? You get phone calls from me. No, I'm just playing. I don't call you and yell at you. But that repayment, that technology, actually stems from what I was telling you guys with, when I saw big problems in the wealth management industry. People were paying $1,000 to $3,000 for a financial plan. First of all, that financial plan is like incomplete because the person that you're talking to probably doesn't know everything. So like most financial planners, for example, know nothing about student loans and know nothing about mortgages. So how are they going to give you advice on that? It doesn't make any sense. So they give you this incomplete plan, and within a month or two, it's completely obsolete, and you have no way of tracking it to know if you're doing it right or not. And so one of the ideas that we had was like, look, we'll help everybody set it up for free, and then we'll track it to make sure they're doing it right. That's where the real value is at, making sure you're doing it right. And if you have something come up, that you can fix it very quick and easily. And so when it comes to repaying loans, that technology, what it will do is not just hold you accountable, but also your loan servicer. So like if you're making prepayments on your loans, we make sure that you're making prepayments on your loans to pay them off soon. But one of the things is that the loan servicers don't always apply the payments correctly. So we make sure they're doing it correctly because we have you link your financial accounts so we can see it. And then if you're going for some type of loan forgiveness plan, there's taxes on those at the end. So we make sure that you're saving for the tax, but we're also making sure that the loan servicer is actually not like overcharging you on your monthly payment, because we see that all the time too. So yeah, it's accountability both for yourself as well in the student loan world for the loan servicers also.
Great, thank you. So next question, could you tell us a little bit about the different repayment plan options and how some students go about choosing the best repayment plan for them?
Yeah, absolutely. And I won't go too much into detail on this because I mean, this is stuff that we do on phone calls and it's personalized for everyone. And then we also do workshops at universities too. So anybody listening, by the way, if you guys want us to do a workshop at your program, we go all over the country doing workshops. Like if your chairs ask how much they are, they're free. So we'll do webinars or workshops in person where we go way more into detail than what I'll go through today. But from a high level, with federal loans, there's 9 different repayment options, and they get really, really confusing when you're trying to dig into each individual one. So to make it easy, what we do is we up level it into 2 strategies. And that's really all you need to know. What strategy am I going with? Either A, I'm going to pay off my loans, or B, I'm going to do some type of loan forgiveness plan. Okay. So when you're doing a payoff plan, you're trying to pay off the loans as fast as you can, making extra payments and so on and so forth, because the faster you pay them, the more you save. Okay. Now, the other thing with that, and this is where a lot of new grads get confused, because when you guys graduate, you're going to get just bombarded with emails from like Laura Road and Splash and SoFi about refinance, refinance, refinance. Refinancing is where you actually replace an old loan with a new loan, and you're doing so to try to get a lower interest rate to save money. Okay. All you have to know, like the big takeaway from the night, if you're listening, is student loan refinances only apply if I'm paying off my loans, my federal loans. And if I have private loans, then I'm doing it. But if I have federal loans and I'm paying off my loans, then I need to look into refinancing. Okay, that's one of the big takeaways. And again, we get the question too, what other type of services you guys have? That is one of the services that we have. Like if you guys build your profile and schedule a call, it's free. And we will, if you decide to refinance or just want to see if refinancing is right for you, we'll do the math with you, and then we'll help you shop up to 11 different companies that we work with. So like the SoFi's, Low Rose, we work with all of them. And just to let you guys know, only about 30% of the people that we work with actually refinance, where it actually makes sense for them to do it. Okay, so that's a free service as well. So that is our payoff plans. Again, you're trying to pay them off as fast as you can, save as much as you can, and look into refinancing if you're going that route. The other route is loan forgiveness. And a lot of times people don't think about it when the word loan forgiveness comes up, is because they're like, I'm not going to work at a nonprofit. But that's not what loan forgiveness means. Okay. The government, if you see these terms like pay as you earn, revised pay as you earn, income-based repayment, or acronyms like PAYE, IBR, IDR, these different acronyms, the government classifies those all as loan forgiveness. Okay. And what happens on those is that your payments are based as a percentage of your income. And so your payments could be really low. So like if your payments are $70 or if your income's like 78 grand a year, your payments are like $400 to $450 a month. Okay. And then your loan balance on those actually keep growing because you're not paying the interest on your loans. And so the balance keeps growing, and then they call them loan forgiveness because after about 20 years, your loans are forgiven and they're gone. However, you have to pay taxes on it. Okay, so whatever you have that loan forgiven at, you have to pay income tax. So on loan forgiveness, you're trying to pay as little as you can every single month, and then save as efficiently as you can for that tax bomb at the end. So the big difference is with the payoff strategy, you're trying to pay it off as fast as you can and save as much as you can. But on loan forgiveness, you're trying to pay as little as you can and save for your tax liability or other goals that you might have or whatnot. Now we always get the question, well, what is public service loan forgiveness and PSLF? PSLF is actually a feature of those forgiveness plans that say if you make 120 payments on those plans while you work full time at a nonprofit, that's 10 years, then your loans are forgiven after 10 years and you owe nothing in taxes. And so that's like the special feature of public service loan forgiveness. But those are the 2 main repayment options. Just remember, payoff strategy or loan forgiveness.
Perfect. And so you mentioned that going through with some students, if loan forgiveness is right for them, is something that you assist students with.
Hmm?
So could you tell us about the other services that FitBucks offers along with the loan forgiveness option and the choosing the right repayment plan?
Yeah, absolutely. So I brought up like the student loan refinance service already. The other one that we see, and I didn't think it was going to be that much, was credit card debt. So we'll help you decide, like, do you just pay that off or do you refinance that as well? Again, we have a bunch of lenders that we partner with for that. And then once you say, yes, this is the financial plan I want to do. So we'll help you set up with the technology, like actually set up a financial plan. And then that technology will give you step-by-step guidance on if you're doing it right. And that's the subscription-based technology on a monthly subscription. Everybody that's an APTA member. So normally that subscription is $30 a month, but as an APTA member, it's $12.99. Okay. And so that's locked in too. So as long as you're an APTA member, it's $12.99. And so that's that technology on that. And then we're launching new things like over the next like 6 months. We're launching stuff like every month. So that's why I shave my head, because I got a lot more gray hair now. So but this month we're actually launching our asset management artificial intelligence technology. And what that one is doing is it's a couple different things. So when you actually sign up for our technology, we will tell you exactly how your investments should be invested based on the ability that you have to take risk. And instead of looking at just like your age, which is what typical like robo advisors do, we look at everything about you. We look at like your income, we look at your education, we look at how much debt you have on student loans, mortgages, car loans, what's your family status look like. And then we say, here's your ability to take risk. And we will update that, and you can see, and we can link your 401ks in, your Roth IRAs in, whatever it is, and actually get updated on that every month to say, are you taking too much risk or not? The other part of that is that we also have the ability to actually manage money for you now also. So like if you want to open up a Roth IRA or just a taxable investment account, we will actually update it based on your profile every single month to make sure that you're like the ability is matching what your actual investments are. So as you get better in your finances and your ability increases, we'll automatically make your investments more risky if you want that, or you can choose not to. But we can manage money now for people also. So that's the part that we're rolling out this month. And then probably next month, we're going to start rolling out new mortgage technology also that tells you how much home you can afford, what type of mortgage you should go in, and like, should you even pay off a loan or not? Or should you even buy a house, or should you keep renting? So that's coming out in the following month. And then the big one that's coming out is where we can automate financial plans, where literally you just answer a few questions and we can automate it for you. And the big piece of that is that it's going to tell you how much of my paycheck should be going where. So how much should be going towards my student loans, how much should be going towards savings for, down payment, how much should be going towards my Roth IRA, my 401k, so on and so forth. So all those technologies are coming out, and it's exciting because we've been working on them for a while. So, but yeah, we're going to be offering a lot and tying a lot more into the membership stuff that we have for the monthly subscription and all that stuff. So it's going good.
That is exciting. So could you tell us, I know you started to talk about the different cost if you're an APTA member, but the different costs for various items, whether you're a member or not.
Yeah. So if you come to us, so everybody can build their profile and use some of the tools that we have on there. They're all free. If you want to schedule a call, it's free. For those of you that like when you graduate, like I said, it's normally $30 a month. The APTA discount is $12.99 a month. We have a special, pretty consistently. Most of the time, it's going to be $15.99 a month or $18.99 a month if you're not an APTA member. Now, for students, like if you want to get on top of this stuff as a student and start figuring out, hey, like what would be available to me, like when I graduate? How can I start actually managing this while I'm in school? We just rolled out a new technology. Part of our partnership with the APTA was to roll out this new technology. And it literally allows you to build a financial plan while you're in school, and actually start tracking everything like your expenses and stuff while you're in school. And we started working with a few different programs actually starting next month, where we're going out to like orientations and stuff at schools and working with first years to start using the technology. That technology is normally $18.99 a month. But right now, like if you're an APTA member, it's $6.99 a month. And then when you graduate, you're automatically locked into the $12.99 when you graduate. So that technology is now available. So again, if you guys have questions on that, just go build your profile and we can walk you through all that.
Great. Thank you so much. So at this point, I'm going to take a little break to give some announcements. So national advocacy dinners are happening right now. So if you need more information, please reach out to any of our board members for more help with resources like virtually recorded presentations, PowerPoints for use, letters to ask for presenters, and graphics for social media advertising. Next April is Financial Literacy Month, so please check out APTA's Financial Center for more information on additional articles plus scholarship opportunities. And in the next few months, we will be putting out some more information regarding student elections, so stay tuned if you're interested in getting involved with APTA as a student member. And we can jump right back into the questions. All right. So, Joe, what is the best way to set yourself up for financial success right now for students tuning in?
Yeah. So one of the big things that we see with students is that they know it's coming and they just don't want to think about it. And then we do stuff like we do a workshop with third years and they're like, man, I wish I would have known this stuff my first year. And the reason being is because just as like I brought up the two strategies, payoff versus loan forgiveness. If you know which way you're going, there's things you can start tweaking and doing financially that will put yourself in a really good situation in the long run. Okay. And so that's a big thing. But not only that, like if you're like, look, for example, you figure out what public service loan forgiveness is, and you're like, wow, like I actually, think that might be an option for me. You can start networking while you're in school to try to get a job at a nonprofit, and you can start doing that type of networking. Or if you're going to say, look, I actually, more of an entrepreneur, and I want to start my own clinic, I want to do these things. You might say, okay, well, I can go on an income-driven repayment plan. Okay, and what do I need to do in order to put myself in a good situation with that? Okay. And sometimes that means you might be actually over borrowing to have some extra money to be able to go start your own business and all that type of stuff. And you just change your mindset. And then also where we see, I brought up the credit card debt. One of the big things there that we saw with students is that they under borrowed while they were in school as well as post graduation because they couldn't borrow any money more and then they're not having an income. And so they're like a month or two shy of having enough funds. So then they use credit card debt and then it just starts piling up. And so our new technology that I mentioned, that's what it actually does is you can literally sit there and say every year my program and every month, these are my expenses. And am I over borrowing? Am I under borrowing? How much money should I have left over so I don't over borrow? And then you can actually track it to make sure you're not over borrowing. And so that's the new technology, but that's, in my opinion, the best way. That's why we rolled that out because, I was talking with the APTA and they're like, well, what's out there for students to start tracking this stuff? I'm like, nothing. And they're like, well, how hard would it be to customize your guys' technology for students? I'm like, give us a month or two. And, we started testing it in January and February of this year. And then we just launched it. So it's like, because there's nothing. And a lot of times students are going to financial aid and financial aid is going to tell you how to get a loan. And that's pretty much it. Not going to tell you anything else. And so, yeah, that, is one of the best ways that we can come up with, and we'll be adding some stuff into that technology too soon. But that's the big thing is getting on top of it and just having an idea of what's going to be coming down the road. So you can start preparing yourself for it and not make mistakes too. Like we see people all the time. They'll be like, Well, I made extra payments while I'm in school, and then I got a gift from a grandparent for $5,000, and I made an extra payment while I was in school, and then they go on loan forgiveness. It's like, well, you should just save the money. Like, start saving it for the tax. Like, you're going on loan forgiveness. And so, don't do that type of stuff. But that's one of the big things that, you want to start just looking into this stuff, even if you're not going to use our technology. Like, just start looking into it. Like, what should I be doing? And then go from there.
Thank you so much. All right, so the first thing that you see when you open FitBucks website is it's like a GPS for your money.
Mhm.
So could you describe what that means and why it's so important?
Yeah, that's geared up more towards our new technology that we rolled out. Part of it's around the FitBucks score. We're going to be making some changes to that too. But GPS for your money. Okay, so I'll back up. I actually make this analogy to GPS, like if you're driving, right? So if you think back like 10, 15 years ago, when you want to drive somewhere, you basically have to pull out a map or go on like MapQuest and get directions and write them down, and then you would start driving. And if there was like an accident, it was like, oh shit, like what am I supposed to do? Right? You got to get out a map again, try to figure out if there's some back roads, or just try to wing it and whatever it was. And then GPS came out, and it's like, this is where I'm going. And it's like, okay, well, here's the different routes to get there. Do you want to take toll roads? Do you not want to take toll roads? Whatever it is, it's like, boom, okay, here's my route. And then as you're driving, if something happens, it's like, reroute, go this way. Like Waze, I love Waze. It's fantastic, right? So, but that's GPS. So with money, this was like one of the big problems that I saw that I mentioned earlier in wealth management, is that we're still stuck. Financial services is still stuck like 15, 20 years ago in terms of like GPS for driving, meaning I go to a financial planner and they're not even working with the complete map because as I mentioned earlier, they don't know stuff about like student loans or whatnot. They maybe can help you with money management. Most of them don't even know that, to be honest with you. And maybe they can help you with estate planning, which you don't really need, or insurance, and you don't really need that either. But they're going to come up with this financial plan for you. So you're like, all right, great, I got my map. And then you're going to be going and driving for 2 or 3 months, not knowing if you're following it right or not, because there's no way for you to tell if you're actually doing it right or not. And then all of a sudden a life event happens. And you're like, well, what am I supposed to do now? Either pay a couple $100 or $1,000 to talk to the guy again, or just kind of wing it and see what happens. And that's why people end up being like 45, 50 years old and they realize, oh shit, like even if they're following a financial plan, they're not anywhere close to hitting their goals. And so that's where we came up with this term, because our technology, what we do is we put all these pieces together for you and say, hey, here's the long run projection. And so you can see your route and you can actually compare different strategies. So like when I talk about payoff loans or loan forgiveness, you can actually say, what would happen long term to me if I do this versus this, and short term this, and actually compare them side by side. And then once you say this is the one I want to do, then it actually tracks it and tells you if you're going the right direction or not. And then if you have that life event or you hit that goal and you need to change something, you just put it right in the technology and it will tell you, okay, change this, this, and this. And then you just make the change to your plan and you get to your goal faster. And so that's the high level. And then if we want to get a little bit more granular, what we did, and this is one of the things that, again, going back to when I was in wealth management, I'm like, God, there's so many problems with wealth management. It's like, even if I put all these pieces together in my head, how do I communicate it to you? Like, how do I make this simple? Because you got like income and expenses and assets and debt and human capital and insurance and all these things you got to try to keep track of. So where we finalized the whole GPS for your money is we took all that data and we put it into one data point. We call it the FitBucks score. So when I say things like you can compare plans, you can compare the numbers, but the first thing we show you is like, here's your FitBucks score over time. Like if you do plan A, here's FitBucks score over time. If you do plan B, this is what it means. So it's very easy to see and compare. And then once you start tracking, you track all your numbers. But again, the first thing you see on your dashboard is like, here's what your FitBucks score should have been. Here's where it actually is at. So you can see very easily if it's above the projection, I'm doing great. If it's below the projection, something's wrong. So like we asked, we talked like in the very first thing, can I have fun while paying off my debt? If that FitBucks score, you log in, your FitBucks score is above the projection, everything's great. Go have fun. Like just keep doing what you're doing. If it starts dropping below, we could very easily say, why is it below? Is it because your budget and you're overspending on your day-to-day expenses and you're partying too much or whatever it is? Or is it something like, hey, look, like the stock market just went down 30%. That's out of your control. Just keep going. Like, just keep doing what you're doing. And so that's what we mean by GPS for your money. It's literally like guidance. And that's why I'm so excited, is because the more technology that we're rolling out over the next 6 to 12 months, the more it's literally like, boom, like change this, here it is. And it's all automated for you. But that's where we came up with that slogan. That's what it relates to. Basically, we're trying to take the financial services industry out of 20, 50 years ago and move it into the modern era. So, but that's where that term came from.
That's awesome. Thank you.
Yep.
So I know you said earlier that most of the time you see when students are looking to repay their loan, it's usually about 5 to 10 years. But is that something that when you're working individually with the student, they get to kind of look at the different map and say, this many years, or how does that work?
Yeah, that's going back to, again, having fun with your life. What are my short-term goals? What are my long-term goals? Because that's something that we always look at. What's the long-term versus the short-term? And what you'll realize is that no matter which one you follow in the long term, it's a lot of times for PTs, it's going to be about the same outcome as long as you follow the plan one way or the other. And so what that ends up doing is you're able to sit there and say, okay, like if I spend X amount on a prepayment, first of all, does this allow me to pay it off in 10 years or less? Because if it's like still going to take you 16 or 17 years to pay off, then just go on loan forgiveness and start saving. Like, it doesn't matter. Or you might turn around and be like, actually, I could get this done in 6 years. Fantastic. Or maybe my target is 8 or 9 years because I also want to do X, Y, Z, and maybe I want to spend a little bit more in the short run, as long as I could pay this off in 10 years. And the reason why, by the way, I say 10 years is statistically, like the way the industry used to work was they had these rule of thumbs that, like, if you went to school and you could pay off your loans in 10 years or less, it was worth it. That was like and statistically, the numbers, that's what backs it. Okay. Now we look at it a little bit different with this thing called human capital, but that's a whole other topic. But that's where like the 10 years or less really started coming in from. And so, like, if you said, look, I can pay off my student loans in 9 years and this allows me to do X, Y, Z on the side, fantastic. And then you can also run a plan saying, hey, like if I do eat top ramen and I'm picking pick up PRN shifts, I'm doing travel, so I make more, whatever it is, can I pay this thing off in 3 years? What would that take? And then you can decide if it's realistic or not. Now, the other cool part, I didn't touch on this with the technology. I said it, but I didn't dive into what it is. I said it, you can tie in life events. Okay, so life events are things like getting married, okay, or a goal like buying a car, buying a house, whatever it is. I'll use a getting married one because a lot of graduates that we talk to are on, getting at that stage of getting married, whatever it is, having children, so on and so forth. And so you could literally say like I'm planning on getting married 2 years after graduation. This is my spouse's situation. How would this affect my savings, my student loan plan? Because that's one of the biggest things, especially on loan forgiveness. We see people leave loan forgiveness all this time because they get married, their financial situation changes, but they just cost themselves a ton of money. They knew they were getting married. It's like, you should have gone the other route to begin with. So they could see that. They could see things like, okay, well, if I have children, what happens if myself or my spouse stay at home part-time or full-time? Is it worth it? Based on how much we save on daycare. So you can run all those scenarios and really look at the trade-offs. And even for students, because I know you guys are students, our new technology, it allows you to do that also. Like, what happens? Because the question I get all the time is, can I work part-time while I'm in school? Okay. My answer to that is it depends on your program because all of them are a little bit different. But you could actually run through the technology and say, okay, well, if I work part-time and I make 12 grand a year and I use that instead of taking out loans, what's really the long-term benefit of doing that? Should I even work? Is it worth it or not? Or the other one that we see too is like, well, somebody told me that I should be making payments while I'm in school. It's like, well, first of all, are you going to do a payoff strategy or loan forgiveness strategy? You want to figure that out first. Second, you want to make sure that you have enough post-graduation and in between each semester that you don't have to get into credit card debt because you overspent paying off your loans. That's not a good situation either. And then you can say, okay, I got all those things figured out. Yes, I got enough money. I'm going to do this. If I make $100 prepayment or a payment every single month while I'm in school, does that make a difference long term or not? So you can compare all those strategies. And absolutely, that's the whole point, is to say, what is the repercussion of all these? And again, I go back to the technology, those problems I saw in wealth management. That was one of the biggest things, is there was nothing out there to say, if I change this, how does this change? How does this change? How does this change? Maybe I can figure out how it changes one of them, but now I got this whole web of all these things changing, and it's just too much. Like, your brain can't calculate it by itself. And so that's actually where the technology is at right now. Before we built the AI components that we're doing now, we built it so that way we can go in with you on the phone and actually make changes to show you, so that way you can say, okay, I can compare this and compare this. But that's the key thing, is making sure that you're looking at it short term and looking at those trade-offs, and actually looking at what happens in the long term.
Thank you again. Yeah, it's really nice how individualized all the technology seems to be. Kind of allows you to take a deep breath and focus on what you really want to focus on, not just a one plan fits all.
Yep.
So next question we have from someone tuning in. So the question is, she says, I am an international student, PPDPT, at Touro University, and I'm planning to pursue my education in America. Could I enroll in the program as an international student?
Yeah, in ours, yeah, absolutely. The only thing is, like, some of, like, the loans, like if you're trying to refinance your loans or get private student loans, a lot of them, as you probably already know, it's very hard to get a loan as an international student. You have to have co-signers and all that type of stuff. But like, we can still help on that. But in terms of the technology, yeah, we're not limited to who we help. It's all available to you also. And if you're at Turo, not sure which one you're at, but I'll be in Vegas in a month. So if you're at the one in Vegas, I'll be there. For some reason, Turo, I don't know why, but we've had some students want us to could do workshops there, and then somehow we never do them. But I will be in Vegas in a month. So if you're in the one in Vegas, great. I think the other one's in New York. Don't have any plans on going to New York, but I could do a webinar. But yeah, you're more than welcome to sign up, schedule a call, then yeah, go from there.
Perfect. Okay, so next question. We've talked about a ton of benefits already, but in your opinion, what are the benefits of using FitBucks to help you repay your loans?
My big thing is peace of mind. One thing that you won't see on our website that you see on a lot of other financial websites is how much you're going to save. Like, you're going to save this amount by refinancing. The average person saves this. We help you grow your assets by this amount. I hate that type of marketing. To me, it's cheesy and it's not good, because the whole point of the technology is, again, it's like, if you do the right things, your return will be there. You will hit your goals. It's a behavioral thing. And if you can reduce the anxiety, with all that, reduce the stress. I've talked to a lot of people at the APTA. I might do some more stuff with them, let it be podcasts and whatnot, about burnout, because one of the leading causes is finance. It's money related, and not just that, but you look at, like, divorce statistics. One of the biggest things is money. You look at abuse, alcohol abuse, child abuse, all these things. A lot of it stems from money. And it's like, so if you can reduce the stress and the anxiety around money, saying, hey, look, even if something happens, like, for example, when we first moved to Texas, my wife totaled our car. It's like, oh shit, now we got, a car loan that I wasn't planning on. Like, you don't have to stress about it. And you just go into the technology, like, okay, instead I was putting this amount here, now I got to put this much here. What does that do to my plan? Do I need to tweak anything else? No, implement. You're done. You don't have to think about it anymore. And so that's the big piece of the benefit, in my opinion, is the peace of mind, knowing that you're doing the things right. And if you're not doing them right, why, like, what you need to do right also, to correct it. And again, it's the long term. That's the whole anxiety. Like, when I was in wealth management, I used to deal a lot with soon to be retirees. Do I have enough money to retire? And they're stressed about it constantly. I mean, it is crazy because it's like I talk to people with like 100 grand in retirement, and they're like, "Yeah, I'm not stressed about it." I'm like, "Yeah, you should be." But then people with like 5 million, they're like freaking out. Like, am I gonna have like enough? Like, my dad was just telling me about my aunt, for example. She's like 78. She has like $3 million like in properties because she bought a bunch of properties in San Jose, California. She's worried about running out of money. I'm like, really? Like, you're gonna be okay. Like, but it's that anxiety of not knowing like if paying off my loans is the right thing to do, or I like loan forgiveness, not knowing like should I buy a house, like can I actually afford this house, not knowing like, hey, this person's a financial person, they're telling me I need life insurance, should I actually get this thing called cash value life insurance? By the way, probably not. Probably term life insurance, and if you get any insurance, you probably should get disability insurance. um, Oh yeah, by the way, I left that one out too. We partner with Policy Genius, and we can do like life insurance and disability insurance now too if you need that. So like we look at all those components. But that's the big thing, is peace of mind, knowing one, I'm not going to get screwed. I didn't even bring that part up. Like when I was in wealth management, the type of crap that I saw, bad. Like I have no problem building the technology that puts financial planners out of business. Let's just say that. But it's that peace of mind knowing I'm doing the right thing. I'm not overpaying for this. I'm not getting screwed. If I need to talk to someone, they're there. They're financial experts. Like I'm paying them a monthly fee, so I don't have to worry about them trying to sell me something that I don't actually need, because it's not in their interest. Like our interest is making sure you're doing the right thing. Because if you feel like something shady's going on, then you're not going to keep paying for the subscription. So it's like you don't have to worry about any of that. So the main benefit again is, yeah, it's you're putting yourself in a good financial situation. You're tracking on that, but to me, it's the peace of mind. It's the behavioral components, the peace of mind. And like I said in the very beginning, the whole point, the whole reason why I wanted to launch technology is because I feel like we spend way too much time thinking about money. And it's like if we can reduce the amount of time that we are thinking about money, then that's more time you're spending, let it be in your profession, like PT, let it be continuing education, let it be spending time with your family. Um, how many people are out there are banging their head against the wall, working extra hours. They're not with their kids, and they don't even know why. They don't even know why that, like, if what they're doing and working extra hours is even going to make a difference in the long run or not. And then if they do make more money, they don't even know what to do with it. Then they're panicking because it's like, well, do I invest it? Do I pay off debt? Do? It's like it's like, so why are you doing these things if you don't even know why? So that's the key thing. That's the big benefit. Reduce anxiety and reduce the amount of time you have to think about money. That's the two main benefits in the long run. And like I always say, the car is not valuable because people wanted to drive. They wanted to get to point A to point B faster because they wanted to be at point B because that's where they really wanted to be and spend time. Right? It's the same thing with money. Like you don't want to spend all your time with money. You want to be point B, like doing what you want to do. Like you said at the very beginning, I want to have fun. Can I do that? Yeah. Like, but you got to make sure that you are on that right path. And again, that's the benefit of the technology, is making sure that you're not stressed out and, just anxiety, is to reduce that level as much as you can.
Thank you again.
Mm-hmm.
So this is a little bit of a different topic, but could you speak a little bit about the student loan deferment that's currently in place, how it could affect students, or I know we were talking about this earlier, current students, it's, kind of not really talked about, but yeah, if you could discuss it a little bit.
Yeah, well, the good news is for current students, you don't have to worry about interest being charged on your loans, and your loan is building while you're in school. So it's a good thing. By the way, side note, like if we keep the current student loan structure, um, I don't think there should be ever interest on loans to begin with. I think it's what I call backdoor tax. And if you guys, I dive a lot into that in one of our podcasts we launched about a year and a half ago, because a year and a half ago, I got the question all the time, what should we do with student loans? It's like, look, if we keep this system, this is what it should be. But that's a side conversation also. But with this current deferment, what you guys need to know for when you graduate, it's actually become a political thing, and it's purely politics. It's not, is it right to do? Is it right for this? Is it right for that? I've been saying it now for 2 years. that they're using this as a political tool, a political device. Um, and now that Biden has extended it again, now you're starting to see people saying the same thing in like the Washington Post. You're starting to see Democrats say the same thing, Republicans say the same thing that I've been saying for a year and a half, 2 years. The reason why I'm saying that, by the way, guys, is like my background, like I mentioned earlier, is investments. And when I was in school, I had a professor that was like, hey, you need to know political science because it influences your investments so much. And so I've studied this stuff for a long time, 15, 20 years in terms of like politics. And that's part of my whole job was to predict what they were going to do so I could position money to make money, basically. Um, and so when it came to this, it's actually a good thing that I did this a year and a half ago was because we had to like launch. We just said, hey, look, the student loans, our outlook is it's going to get, pushed back and pushed back and pushed back. So let's go gun ho building the financial planning technology. But anyways, I digress. What does it mean for you guys when you graduate? First of all, the student loan industry experts, political experts, nobody thinks that student loans are going to kick back in August or September. The midterms are coming up. It's the only way they would kick back in is if some type of loan forgiveness was put into place. And the probability of that happening is basically zero. Even though everybody's like, oh, well, like, Biden can, write off $10,000 or whatever he wants to with an executive thing. Nancy Pelosi, who basically is the head Democrat in the House of Representatives, she already said like a year ago, he can't. It's against the law. He needs the House to pass a bill. And so this close to a midterm, they're not passing anything. Like they're in a full election cycle right now. So the probability of it happening in August is not. Now, I've been saying it's going to be one of two things. They're going to wait until February because that's when a new Congress comes in. And, also it's going to start gearing up a presidential election run for 2024. And so it's a great time to kick loans back in because all the political analysts believe that Republicans are going to take over the House and the Senate. And so it would be great to be like, well, we want to get this stuff done, but we can't because of the Republicans. And again, it's just voting tactics and campaign tactics. So I think the earliest that we're going to see it kick in is February to June of sometime of next year. Maybe it'll be targeted towards only certain people kicking back in. Like there might be an income threshold, so on and so forth. But I think it's going to be the earliest sometime next year. That's one thought. The other thought is that as long as there's a Democrat in office, they're not going to kick him back in ever. It's just going to keep executive, just extension after extension after executive order, extending them. And it's just going to kick it off. So the earliest it would be is if there was a new president in 2025. That's what I'm probably leaning towards if I had to put my money on it. But we'll see. I'm kind of like 50-50 now. Is it going to be early next year or is it not going to be until 2025? But I know I've gotten a lot of that question this last week just because of the extension that they just had. But that's really what you're looking at, especially for some of you that are probably going to be graduating here coming up in like May, coming up soon. You're probably not going to have a payment till next year. That's just the reality of it. That doesn't mean don't plan. That's the other thing that I'm hearing is, oh, we don't need to do anything. We don't need to plan because payments aren't kicked in. It's like, oh, you still got 401ks, you still got IRAs, you still got everything else that you got to plan for. Like start planning, and pretend the payment's there. Don't just be like, oh, well, I don't have to do this, so I'm just going to spend money. No, not a good strategy.
That's great advice. Well, it looks like that is all the questions that I had for you, Joe. So first of all, thank you so much. I know I've learned a lot, so I'm sure everybody listening has learned a ton. And I really appreciate you taking all the time to answer these questions. But is there anything else you'd like to add? And then definitely let us know where we can reach you if we have any more questions or how we can contact FitBucks to hold a workshop.
Yeah, and I'll expand on one thing with the deferment stuff that's going on, because lots of times we get then the question of, well, should I pay them back or not? Like if I was going to make payments. Still plan on it, but instead of giving the money to the government, just put it in your own bank account. I mean, it's at 0% interest. So put it in your own bank account. And then when they actually do kick them in, then go ahead and, make that payment. If you want to refinance, like I said, only about 20-25% of people that we work with, they're refinancing some of their higher interest rate loans just because they're like, interest rates are really low right now compared to where they're going to be in about a year, because interest rates are going to go up. And I'll touch on, by the way, I'll touch on a strategy for you guys real quick too before we leave, that are students that you could really implement. Okay. But if you're graduating in like May or June and you were going to be making payments, pretend like you're still making them, just put in your bank account. And then right when they kick back in, just make a huge prepayment, pay them off, looking at refinancing. Okay. Students. I'm glad that this actually, I went down this route because I, didn't even think about this. So Congress sets interest rates every May. And then they come out, the last month is June, and then every July they reset. So from July to June, the interest rates are the same. Okay. Interest rates are going up, and they're going to go up a lot compared to where they're at right now. In May coming up is when they're going to set the next rates. But if you can still borrow money right now before June, I would take out extra, even if you don't need it. And then in future semesters, take out less, because the interest rates are going to go up a lot. And even next semester, after interest rates go up, I would still take out more in next calendar year, because if you're still going to be in school past July 2023, interest rates are going to be really high. Okay. So try to take out as much as you can over the coming semesters and over the coming quarters, because and just put it in the bank. Don't use it and take out less in the future. It's going to get ugly. I mean, they're probably going to go up 1 or 2% from where they're at now this year. And then what's called the Federal Reserve is already talking about aggressively raising rates after that, coming up in May and June. So we might see them go up another 2 or 3%. So if you could take out more money now, do so. It will save you a ton in the long run.
Great. Thank you so much.
So, oh yeah. And then you also asked, contacting us. Sorry.
Oh, perfect. Go ahead.
FitBucks.com. Like I said, the tools, the profiles are free. You just go to FitBucks.com, build your profile. You can use the tools. If you want help, all you have to do, there's a little phone icon up in the top right. You click it, schedule a call. We'll walk you through, answer your questions, help you build your plan. The only part that you pay for is if you actually sign up for the month-to-month component, where you're tracking everything. So FitBucks.com, again, we have our podcast that we roll out too. Going to be doing a lot more on that coming up in about a month. Same with our blog too. We're going to be rolling that out more. And the big thing too that we're going to be working on a lot with the APTA, we're already starting this with a few programs, is more workshops and more webinars. And so we're really gearing it up for 2 different workshops and webinars. One is designed specifically for third years or second years, like if you're in an accelerated program, about a month or 2 before you graduate, where we actually go in and really go into details, and we do a workshop. We're actually building out plans with you guys and everything. And then for first years also, a lot of schools have started working with us to do it like a month or 2 after graduation. A month or 2 after school starts, to actually build out the plan. Some of the schools actually, I was actually shocked by this. 2 of the schools just got back to me. They are actually doing it before they even start, before they even go through orientation. So if you guys are interested in that too, wanting to deeper dive and have your programs do that, just reach out to me at joer@fitbucks.com. That's just my direct email, and then we can coordinate and figure out how to do the workshops and when they are and all that type of stuff, and then go from there.
All right. Thank you again, Joe. I really appreciate you being here. It's so nice to meet you and talk to you. Again, you guys, if you didn't hear it, the email is joer@fitbucks.com if you have any more questions or would like to learn more about holding a workshop. So thank you all for joining. This is a live recording, but thank you for being here, or thank you for watching if you watch in the future. So again, my name is Casey. I appreciate you all being here.